Several months ago, I traded a breakout strategy that began to produce worse results with each passing month. I knew that I needed to change things up, and I began developing a strategy that I now trade, which is called the bungee pullback, and I've used it consistently to make a couple $100s a day. So be sure to stick around and watch the entire video because in it, I'll walk you through my entire thought process that I used to create my profitable strategy. Any strategy must begin with an observation, and this is why I stress the importance of paper trading on my channel. And if you're watching this video and you do not have a strategy, I would suggest that you paper trade to develop your trading ability and make some observations on the market until something catches your interest. For me, I have been trading profitably using breakout strategies such as the pre-market high breakouts, high of day breaks, open range breakouts, bull flags, and more, but I began to recognize that my returns were diminishing and I understood the importance in beginning to search for a new strategy. The foundation that I built my new strategy from is from the popular proverb, buy the dip. And luckily for me, I had already spent several months paper trading, and I had already had an observation which I wanted to look into. Allow me to share my observation from one of my older videos that was the foundation which my current strategy has been built around. So the next stock I traded was CCL, which I've been downtrending for most of the day. I had the stock open on my second monitor, and I saw it approaching a level of resistance I had drawn in the pre-market. I really like this setup because it has ascending volume on the 1-minute chart, and right here, just as it crosses the level that I had drawn, I place an order, a market order to buy, and it's really going up quite quickly right now. It's a breakout, and I don't have a profit target in mind, so my current plan is to sell on the first pullback. So if the stock falls below the price that it opened on this candle or any other candle, I would be looking to sell. And right here, it does end up crossing, and I sell, but unfortunately I got filled towards the bottom of that candle, so I lost out on a bit of profit. Now for those of you who have watched my live day trading videos, this move should look very familiar to you. But for the new people here, I'll show you a clip of me trading my current strategy from my latest video. We just hit 30 minutes of trading. I said I was going to walk out after 30 minutes, but I'm going to stay a little bit longer. Strictly because I'm $60 off of 200, and 200 is the goal for this month, 200 a day. So
Right.
all right,
Yeah,
$60 scalp, $60 scalp on Weeza. We are up $203 for the day. From the first video you saw, I was buying a breakout and then I sold when the open green candle became red. This was fundamental for me when I was trading breakouts. Very often after a breakout, I would observe a flush, and upon further inspection, I realized that these flushes almost always had a very quick bounce. And it was this observation that would eventually become the most profitable strategy I've ever traded, the bungee pullback. And after you've spent some time trading and you've made an observation that has piqued your interest, it is time to begin experimentation and determining the best way to profit off of it. But before we dive into experimentation further, if you've been enjoying this video, please be sure to smash the like button for the YouTube algorithm and subscribe for more content. And to recap, I started with an observation that stocks that had gapped up will often experience many wide-range red candles that will quickly bounce, which presented an opportunity for profit. And I formed a hypothesis that if I could accurately buy the bottom of these candles, that I could make good profit on each trade with a very high accuracy. So when you're developing your strategy, what you're going to want to do is make observations on the market and frequently ask yourself the question, can I make money from this observation? And when you found your answer to that question, then you're now ready to test the hypothesis in the next step, which is experimentation. And as I had already mentioned, the observation that I built my bungee pullback strategy from was one which I was already very familiar with from the many months that I had traded breakouts. And for this reason, experimentation was very easy for me, and I began to test my hypothesis in paper trading with an immediate success. Although I wasn't as accurate then as I am now, since I currently trade with an 85 to 90% win rate on most days, I knew I was onto something. And I very quickly made the transition and began experimentation in my live account, continuing the same success I had had in paper trading. And I'll now show you a clip from the earliest video of me trading the bungee pullback on my channel. So now we are going to hop into my trades, and every single trade you see in this video is going to be a pullback, though I've divided it into 3 separate classifications because I do think that there is a distinction to be made between the different types of pullbacks I'm trading. So the first type of pullback we're going to take a look at is the extreme pullback, which is classified as a very intense, sort of irrational move in an upwards trend. And what's important when you're buying pullbacks of any kind is that it's above the VWAP, because if you're trading below the VWAP, it's no longer a pullback, but you're looking for a reversal. So anyways, we'll hop into these trades and we'll kind of see what I was doing. So the first trade we took was on GENE, and you can see it has an intense move where it breaks below the 90 MA. I purchase near the bottom and just sell very quickly as it bounces back up. And that is the theme for every single one of these trades, is that it's an intense move, it breaks all levels of support kind of irrationally, and then you just buy and very quickly sell. This is not a strategy where you want to buy and hold, because when it has these intense moves, it seems that very oftentimes it will actually continue to go down. And that's not the case most of or all of the time, but it does seem that happens very frequently. So you just want to buy as it has a quick recovery, and then you want to get out. The video we just watched was towards the end of my bungee pullbacks experimentation period, and the purpose of experimentation is to test your hypothesis to discover if it has merit. But do be careful, a successful experimentation period does not necessarily prove that your hypothesis is correct, but instead that it is more likely to be correct. And at the time of sharing the video that we just watched, I had spent a couple weeks testing my bungee pullback with nearly flawless results, and after uploading I began the final step, which is refinement. And the purpose of the refinement step is to begin making small improvements that will collectively make a significant increase in the strategy's profitability. And because this step can be so variable due to the vast amount of strategies there can be, I can't tell you exactly how to refine your strategy, but instead I'll offer some examples of how I've refined my own bungee pullback. For starters, in the video in which I introduced the bungee pullback, you can see I used a market order to buy and sell. Nowadays, I exclusively buy on the bid and I'll sell on the ask. And this difference in execution eliminates a lot of the risk involved using market orders in the high-speed strategy, while significantly increasing both the win rate and my average profit. And another change that I've made is integrating the level 2 to determine the velocity of the flush, which has greatly improved my ability to buy the exact bottom and significantly increase my win rate. And for one last refinement that I'm willing to share that I made is that I adjusted the average hold time of my positions. And I used to hold trades for a couple seconds, whereas now I will regularly sell in 1 second or less. So to summarize how to actually develop a profitable trading strategy, you first want to make many observations until you create a hypothesis on a pattern you believe you can profit from. You will then begin an experiment to test the validity of your hypothesis, and finally make small refinements to round off the edges. I hope you all enjoyed this video. Don't forget to smash the like button and subscribe, and I'll see you all in the next video.